I've worked with hundreds of accountants, and I've noticed a pattern. Some of them save their clients thousands of dollars a year, while others cost their clients thousands of dollars a year. The difference? A few key questions. Unfortunately, though, business owners don't ask their accountants these questions, and it's bleeding them cash year after year. Let's fix that. I'm going to give you the 5 questions that you must ask your accountant to determine whether they're costing you thousands of dollars a year or whether they're helping you save thousands of dollars a year. Before we can get to the questions, we first need to establish who we're going to be looking at. Because if I just give you the questions, how are you going to know whether that accountant is costing you money or saving you money? To help you look at that through this lens is what I want you to view it as is through my owner-operator quadrant. On one end of that quadrant, we have owner-operators. These are accountants who will be costing you money. On the other end of the spectrum, we have owner-investors. These are accountants who will be saving you money. And the goal here is to give you a framework so that when you go to your accountant and you ask them these questions, you can know somewhat based off of their answers whether they're an owner-operator accountant or whether they're an owner-investor accountant. The first question that you must ask your accountant is, how often do we meet? Not just for compliance or bookkeeping reasons or accounting reasons, but for specific, dedicated tax strategy sessions. Owner-operator accountants who are going to be costing you money are going to answer 1 to 2 times a year. Usually will be around tax time, and then usually at the end of the year so we can get everything together. I'll give you a few different ideas on what you can do to save your taxes. That's the owner-operator response. In comparison, the owner-investor will say, we meet quarterly, and we proactively give you strategies that go do this, or here's an opportunity, or think about this, or do that. And then the next quarter, we're meeting again and we're checking on it. Are you above projections, below projections, on target? Do we need to add more strategies? Do we need to take away from strategies? Do you have questions? It's a completely different response. Owner-operators are responding with a reactive response. Owner-investors are responding with a proactive response. The second question you must ask your accountant is, who else is involved in the tax plan outside of you? Owner-operator accountants will respond like this. Well, it's just me. We have a big firm here, but I'm the one who formulates the plan. I'm the one who files the taxes and keeps it compliant. Owner-investors, on the other hand, will say, I am not the expert of everything. In order for me to offer the tax strategies that are best for you, I have to rely on other people, other professionals, to give me access to the strategies that will benefit you. For example, I need a registered investment advisor that understands the oil and gas space or the real estate space that can provide you with opportunities to invest that are also safe, but will also give you access to the intangible drilling cost deduction. Or I need a tax attorney to help me execute this entity structuring solution. Or I need this very specific tax specialist, like a research and development tax credit specialist, who could access that credit for you in your business. An owner-investor is going to reply with a team approach versus the owner-operator is going to reply with a very solo-oriented approach outside of maybe their admin or their bookkeeping team. The third question that you must ask your accountant is, what steps are you taking to explore and implement new tax strategies for clients like me? The owner-operator accountant is probably going to be a little flustered. They're going to say, well, I do CE credits and I stay up to date and I stick with what I know and I just do what I do to help you prevent being audited. Something around those lines. In contrast, the owner-investor accountant is going to say something like, I regularly attend tax planning conferences. I stay up to date with tax attorneys. I study when new laws or changes come out. I'm constantly exploring different ways to help you reduce your taxes. And just because I explore something doesn't mean I'm going to bring it to your attention or doesn't mean it's right for you. And I say no to a lot of different strategies, but I do a lot of due diligence and vetting and discussing and attending meetings and speaking with advisors and mentors and people in the space. I want to be on top of this as best as possible. The reason this is so important is on one end, you have someone that isn't staying stagnant. They're growing with you and they're expanding over time with you. Well, the other person is likely to be outgrown. The owner operator will be outgrown, costing you thousands a year. The owner investor will be able to grow and mitigate with you as tax law changes and things happen. But they have to be willing to expand their knowledge on the subject in order to help you save taxes. The fourth question that you must ask your accountant is, what role do qualified plans like defined benefit plans play in your overall tax strategy? Owner-operator accountants will answer, it's essential. That is how we help you save so much in taxes. Contrastingly, the owner-investor will answer, they're an option and a tool for helping us delay taxes, but they are not our primary go-to for helping you reduce your tax bill in a given year. Did you hear the subtle difference? Owner-operator accountants believe that the qualified plan is the crown jewel of tax strategy. Owner-investor accountants, on the other hand, view it as an option that could be utilized, but it's not essential. Because owner-investor accountants understand that defined benefit plans, SEPs, 401ks, IRAs are just a delay of future taxation. You haven't saved taxes, you've delayed them. Now, that could be the right choice for you, and it could be the decision you make, but they're not trying to make you believe the qualified plan is actually saving you taxes, because in many instances, qualified plans are just delaying the taxes. The fifth question you must ask your accountant is, how do you help clients proactively plan to mitigate capital gains when selling things like my business or other significant assets? Owner-operators will respond with, making money means paying more taxes. It's just something you have to get used to. Owner-investor accountants will respond with, we plan ahead. We're not just focused on now and this year's taxes. We're looking at your entire plan. What is the destination that you want to hit? How big are you trying to go? What things are you trying to reach? And then we're going to work backwards with you on what steps you need to take today to make it so that our capital gains are mitigated in the future. So you're going to be looking at things as you grow and expand, like private family foundations and private placement life insurance, or if the tax code stays the same, things like qualified opportunity zones or other donation techniques. We plan ahead with you. We want to learn, what are your aspirations? How big are you trying to go? Where is your final destination? How much do you want to sell your business for? And then from that decision, once we know what you want, where you want to go, we can work backwards to determine what action steps need to be taken today. Because there are things that we can implement with you that can reduce your tax bill in the future if you reach those levels of business success. The owner-operator is focused on it's just a consequence of making money. There really isn't anything we can do. You just got to get used to it. Versus the owner-investor is, where do you want to go? What do you want to do? And we can help shape a plan with you over time, proactively, to help you reduce your capital gains as those needs arise. If you ask your accountant these 5 questions, you're ahead of, I would dare say, 99% of business owners. It's my experience that business owners have no clue whether their accountant is an owner-operator accountant or an owner-investor accountant. They're basing it off of, well, he's a nice person, or she's a nice gal and she does really great work and they get their stuff done on time and I've never been audited, which can all be great characteristics of a good accountant. But the thing that a lot of business owners miss out on is just because they have those qualities doesn't necessarily mean that they also can help you save taxes. Doesn't mean that they're being strategic. It just means that they're good at those qualities. And these 5 questions will help you start to uncover whether they're the owner-operator type accountant who's costing you thousands of dollars a year, or whether they're the owner-investor type accountant who's saving you thousands of dollars a year. But here's the thing. These 5 questions aren't all the questions that you should ask your accountant. I've put together a list of 15 more questions that you must ask your accountant to help you determine whether they're the owner-operator or whether they're the owner-investor type of accountant. Or in other words, the accountants who are costing you money versus the accountants who are saving you money. If you want access to these additional 15 questions, or in total all 20 of the questions, with a sheet that you can fill out and actually ask them and take notes on how are they asking them, you can get access to that in the description below. The fact that you're listening to this already separates you out from the average everyday business owner, because you already know that you have to get your taxes right if you're truly going to reach the levels of wealth and aspiration and success that you are wanting to accomplish. The people in this world that just blindly pay taxes and let their accountants do it oftentimes pay thousands of dollars a year extra to the IRS that doesn't need to be sent to them. That's millions of dollars over the course of a career, and it's millions more of what it could have become had it stayed with you, but you're different. And I'm grateful that you've chosen to be different. And I hope that these 20 questions you're going to get access to will give you the permission to start identifying who should be on my team, who should be in my corner to help me reach my highest levels versus just letting people that aren't going to push you to the highest levels be on your team. If this helped you, please hit the like and subscribe button so that more business owners can get content just like this. At the end of the day, your accountant is either costing you money or saving you money. Now go take those questions and find out which one your accountant is doing. And until next time, I'm Justin Maxwell.